Jump out, girls.
Jump out, girls.
Here we go.
Yep.
What's our topic today?
We wanted to talk a little bit about credit, correct?
Oh, yeah, I like that.
Credit.
Yeah.
People tend to kind of shy away from that.
Right. And have a lot of misinformation about credit, right?
They do. Or them comprehending it.
Our own misunderstanding about credit.
Absolutely. We thought credit was not something that you were supposed to really use.
Exactly.
Because it was like, oh, credit is bad if you have cash, which that's what we have.
Mm-hmm.
It's you use your cash, don't ever have a bill out there. That's what it was.
Yeah.
If you could pay for it in full right around, like, as soon as you get, just do it. Why would you
Yeah,
have credit?
exactly. And, it was a lot of times, our own family members and just kind of like how society teaches you. They teach you that credit is bad. They teach you, don't get a credit card. It's, stay away from credit cards. And that's really not the case because you need credit in order to obtain assets.
Absolutely.
Right? And, we're big on assets and liabilities just because without assets, we're trying to grow, we're trying to develop. Leverage. So let's go a little bit into that good old word, leverage.
I'll talk about the credit part as far as if you have a a credit union and obtaining, because I know people are like, well, I have bad credit, so how do I get a credit card? And that's when you go to a credit union and ask for a secured credit card. And what a secured card is whatever money you put up front that's in the account, that's the available balance that will be on the card. So you put $500 in, you have a $500 balance. And then in time, you pay on it, then that $500 turns, you get that back, and now it'll double. Now you have $1,000 because you've been paying on time. So now, for you paying $500, now you've increased, and now you have $1,000 you can use instead of $500. See, this is what people don't understand. It's about constantly being able to use this money over and over.
Yes.
When you use your debit card or cash, once it's gone,
it's gone. And I think that's like a lot of times I don't think growing up I ever heard the word leverage credit.
No,
have
never.
you?
Never. No.
I don't think we were taught like how to leverage credit, and it's just like even if you're in a situation where you have bad credit, like you said, and you want to use a secure credit card, there's still ways to leverage credit. And I think one of the ways that we learned was exactly, was how instead of using your debit card, use your credit card for everything
that you can afford to pay, actually.
Right. Because the way that, a lot of times you hear people say, don't use credit, but it's just like if you use your debit card, you're losing cash that you can use for other assets, or you're losing your investments, you're using your liquidity, right? So it's like for us, we have the stance, or not so much something new, we just learned it, to use our credit card versus using our debit card, and then we use our debit card to pay back our credit card. Now, granted, you have to be disciplined. You have to know, like, hey, if you're not going to buy a $500 purchase on your debit card, don't do it on your credit card. Why would you do that?
If you don't have the money.
If you don't have the money. So treat your credit card as you treat your debit card. And then what it does is you have more liquidity in your bank account because you still have this cash sitting in your bank account. And if an emergency comes up, hey, guess what? If an emergency comes up, I'm not saying do this every time, but if there's a situation where, hey, I need this cash for something, I'm going to use this cash,
absolutely,
pay the minimum on my credit card. Again, I'm not suggesting to do that, but if you have this cash over here, it's an emergency, you can use that versus using your credit card, you know what I mean, no, I messed up. You can use, you can use your debit card to pay back your credit card, but if you can also use the cash in your bank account, for the emergency.
Yes.
Right? Yeah. And then just pay the minimum balance until you get the money back to pay the card fully off. But again, the point of the matter is that many times we're taught don't use a credit card. And it's just like, how can you get assets without having a credit score? And a lot of times people don't know how to increase their credit score. And I think you want to share your story, how you increase your credit score?
I mean, it's a process. What I did, like what I said, to increase my credit score, I went to a credit union, Navy Federal actually. Shout out Navy Federal. I love y'all. Charles is my man. Anyways, and I spoke with the financial advisor there, and I did a personal loan. I started off with like $500, I believe, and then I got a secured credit card for, I believe, 1,000. And so I paid off the $500 within 6 months. So that showed a certain consistency, but it's not long enough because my issue is I have a thin file. I had a thin file. I didn't have a lot
Right.
of things on it because I use cash for. I legitimately use. She will tell you, as long as
Cash.
we have been in the working force, it's been cash for everything. And so
Yeah.
my file was legitimately thin because I had a credit card when I was younger. Stop, whatever, all that. So now I did that. I got the secured card, and then my $1,000. I think I started off with like $1,000. Within, I'm gonna say 4 to 6 months, they doubled my balance, and now my balance, and then my balance went to $2,000. And now, like I said, it wasn't something that happened within 30 days. It's something that gradually takes
Right.
time.
Right.
But to look back from one year to the next and see that you have grown, you can grow like 100 points or something like
Right.
that.
Right.
And slow, it's a slow roll, but it's beneficial because
Right.
it's what we've been saying, like we said in the first one, because it's teaching patience
Yes.
and it's teaching discipline.
Yes.
And if you want everything right away, right now, it's not going to last. We're talking about generational wealth. That's what we're keep trying to emphasize. We want our children's children and their children, then their children, to be able to continue what we have. And to have generational wealth, it does not happen fast at all.
No.
It's a slow process. So when it comes down to the credit, that's the process that I took to build. And within time, they just kept, here's another increase, because in reality, they're like, she's going to slip up one
Yeah,
day.
because the
So I'm going to
reality
give her
is,
some more.
like, just think about it. Like when we were in school, right? Who was lined up in the hallways? Credit card companies. You know what I mean? Like, who's lined up when you go to different events?
Because they know you need it. They know, like,
You're
oh, these
right.
young children, like, that's when I messed up my credit. Like, and I think that's majority. Well, now I'm going to say majority, but that's a lot of children, or when they graduate high school,
Right, right.
you mess up your credit damn near as soon as you go to college or while you're in it, because, oh, we're grown and now they giving me credit cards and I don't have my mom and daddy to tell me
Right,
no.
right.
But we didn't have the information. No, we don't need a credit card because you don't know how to properly manage it.
Exactly.
Until we know how to properly manage these things.
Exactly.
And what we're saying is, and even me, I've had some of my family members, like little cousins and stuff. I said, look, even start off with a $300 secure credit card, because that way you don't want to start off with something like, oh yeah, well I have $1,000.
Right.
No.
Right.
Because you might get a little too excited one day
Exactly.
and go overboard, and you want to always have it paid off before the ending cycle, before the payday. I mean, the ending cycle, or however that is.
Yeah, I mean, honest.
Statement. There you go.
Right. Even if it's the end of the statement, or literally if you're using it that same day, you paid off that same day.
Yeah.
The fact is that you don't want to carry a balance over to your next billing cycle.
Absolutely.
Because then you're hit with interest on that billing
And it's
period.
dumb.
And that's dumb. You know what I mean? So it's just like, I'm not saying you're going to get away completely with paying a little bit of interest, but at the same time, you're also building your credit.
Absolutely.
And it's just like a lot of times we don't understand. We always hear about credit in the sense of like a negative standpoint. So like you hear, oh, I can help build your credit. Well, how about let's help maintain our credit? Let's use our credit to our advantage. Because if you have credit, you're able to leverage other things. And a lot of times, we were saying that we're into crypto right now. Like, not to say we're not going to be in crypto forever, but it's more of our focus right now. So what we've been able to do is leverage our credit to go purchase crypto, because we know that crypto, the I guess the profits or the gains that we'll gain from crypto will far exceed,
us paying this loan back.
Right.
And you can pay it back. And if we wanted to, we could pay it back all at once. All at once, or over time, building more credit. The longer you pay on something too, because the creditors want to see this history. They want to see consistency of 3, 4, 5 years. Wow, these people pay their bills on time. They do all of these things. And that gives them a confidence to say, okay, I can give you more money.
Right.
I even tell younger ones, like, look, get a $200-$300 card, right?
Right.
And then do something like, okay, you want to get some, I don't know, whatever you need to get. Buy it. and then pay it off. Use that for like one time, once a month,
Right.
once a month activity.
Right.
Use it and pay it off once a month. Start off small with that, you know, because
Right.
I mean it's going to take time,
Right.
but it'll at least build your credit,
Yes.
and it'll show you over time how to take your time.
Right.
Because that's another thing. While credit, they're not going to just give you $10,000.
No.
You
No.
have to prove that you can be responsible for $10,000. So you
Exactly.
got to prove that you can be responsible for 100.
Exactly.
And if you can't be responsible for 100, then you can't be responsible for 1,000 or anything higher.
Right. And you have to start somewhere, because it's just like not everybody's in the situation where what we're trying to set up is the fact of having our family members, her children, you know, with credit. You know, we want them to have credit history before they become adults.
Absolutely.
We want them to have credit history before it's time for them to need it. We want it to already be there. So a lot of times, you know, like there's times where people have abused credit. There's time people have, you know, not understood how to use it properly. So like for us, our idea is that we want to leverage credit so that when we're creating this generational wealth, we're actually creating generational wealth, because she's now added her sons to her credit cards so that they can have credit. You want to speak on that? With how
something that literally I learned at a fly, like literally just a flyby one day, and then I did more research. I added my children, well actually no, not all of them yet, but my oldest one right now, to one of my credit cards as an authorized user. And what that does is, as long as I'm still paying, he doesn't have any financial responsibility to it. And when an authorized user is like, now understand, they can get a card too if you if you request it. And then you can, some places will let you put a balance amount, like, oh, don't spend over a certain amount or whatever, or and others will give you the whole amount of whatever the original card was. So for me, he doesn't know anything about it right now because it doesn't matter.
Doesn't matter, right?
But I put him on, and as long as I continue to pay it on time, it will help build his credit. And so the goal is, by the time he's 18 to go to college or whatever he wants to do, he'll now have credit established, a strong foundation. People are like, oh wow, I feel comfortable. And that's what we never realized about credit. It's it's kind of like a trust factor. Like if you can't pay it, then we're not giving it.
It's the same thing when you heard about people, their mamas and daddies putting the electric bills in their name, putting the cable in their name.
I like that point.
Right.
That's a very good point.
Right.
Because it's been that's where it was abused. That's the liabilities of it.
Yes.
That people don't understand. They're doing it because they ran up so many phone bills and not paying them, and now their credit is shot, so they use their child.
Right.
It's two sides to that. It's some good to that and some bad to that, but it's how you treat it.
Yes.
The good to that, if you put a phone bill in your child's name now, if you're paying it every month, that's amazing. You're building credit. The bad is what's terrible, and I think it's the worst thing in the world, is how people have used their children's credit, and then when they're 18, they are completely behind the ball.
Literally.
And they're confused because they weren't even aware of it.
Right.
And that's not fair.
No.
That's not fair at all.
And it's not fair because it's misinformation. Because just a lot of times we find that the information is there in our face.
Absolutely.
And it's just like we just don't know. We weren't taught. So it's just like the same way that if you can say, okay, if I put this bill in my child's name, I'm doing something for my child. Now, granted, electric bill, a cable bill, okay. But at the same time, how about use that for something that they can actually use later? A credit card, a relationship with banks. And that's another thing that we develop with the credit. Is like many times you hear that people don't trust banks, especially in our community, right? Oh, banks are frauds. Now, granted, yes, but you still have to leverage banks. You still have to leverage credit. You still have to be able to use them to your advantage, right?
Yeah, you use them to your advantage. You don't let them use you, and that's what most credit cards and banks do. They take advantage of us.
Right.
They use us. They take our money.
Right.
We don't take advantage of them, and you can. And when you hear somebody say, "Oh, take advantage of the banking system," you're like, "How?" Take advantage of the credit system. You're like, "How?" Oh boy, you can.
You can do it.
You really can.
And the thing is like I think, for me, like the way that I'm leveraging credit is I'm using it as my debit card. So I don't use a debit card. I literally lost a PIN to my debit card. No idea what it is, right?
Good.
I had to get a reset,
Really?
Yeah. So it's just like I use my credit card for everything, but I'm using it as if it were my debit card.
Mm-hmm.
So it's not like a situation where I'm worried about, oh, can I pay this? No, I'm treating it like my debit card because I'm establishing history with my bank, and I'm also getting used to the fact of not using the debit card because I want to use that liquidity that's in my account for other assets that we're working on right now, just because it's easier to have the cash in order to pay for things like crypto,
Mm-hmm.
hey, down payment on property that we
Mm-hmm.
own, the various things that we're doing, because it's not just one thing. And that's another thing, like, you don't just have to do something one way. There's different ways that you can leverage credit. You can leverage credit by using loans, right?
Absolutely.
Outside of the secure loan, you can also get a loan,
Personal.
a personal loan,
Mm-hmm.
wherever. You get a personal loan from maybe Fed,
Maybe Fed.
whoever. Preferably, we like credit unions just because we find that you get better rates with credit unions and you get better customer service.
You do.
That's a personal opinion.
That's my opinion too.
You know, think what you want to think. However, you can still get a loan, use that loan, pay back the minimum on that loan that you have, but then at the same time, you're able to take that money that you are just paying this minimum on this loan to go do
And
other
grow.
things
So
and grow.
you'll have,
Right.
yeah, it's to grow. Example, I'll give you a great example. We have what, 4 months before you're retiring.
Yep.
She set a goal. I'm sorry, I'm not working. She set a goal to where she wants to be done by the end of this year. That's 4 months.
Yeah.
I have a goal to what I need. I want to get a truck, like a 18-wheeler. That's one of my goals. So I'll say for me, what I would do is I would go to the bank. I would ask the bank for, I'm gonna say $50,000. Let's just say $50,000, and then $50,000, that payment a month back to the bank might be what,
Maybe 300.
three to five. I'm gonna just say five. I'm gonna say five high. Okay. Now I can take that $50,000 and invest it in something that's about to bring me more money. And over time, I'm only paying $500 a month for the 50,000, while it's growing into something right now. And then as it keeps growing, I can keep paying it back. Now I'm doing two things. Now I'm building more credit,
Yes.
and now I'm building the ability to be able to get a bigger loan.
Yes.
So when I pay this back,
Yes.
now they're like, oh yeah, 50, you
Yes.
did 50, no problem.
Yes.
You can have 150.
Yes.
And so what all of that does is it just gives it gives more options to do things. So the loan will give the money to be able to pay some things off, or to be able to invest. I don't, if I'm taking out a loan, I'm not paying it. I'm not doing it for no bills.
No.
We're not taking out loans for bills.
No.
If we're taking out loans, it's legitimately to put in something that's going to grow the money even more.
We want to hone in. Jump Out Girls we're about assets and liabilities, right? And sometimes we look at things in the sense of we're thinking that this is a liability. So how many times have you heard, oh, I pay cash for that?
Yeah.
You just lost your cash.
Yeah, because it's one of those things where it's like, yeah, that's good, but you can't get it back.
No.
Perfect example. Somebody had got my debit card. Okay.
Oh, really?
Last year, and it was like around COVID because they charged some type of it was to some type of organization. I had never in my life. Anyways, I had never heard about it. So, and this was an eye opener for me as well, to make me continue to do what we were doing.
Right.
When they take your money out, when your credit card is stolen, your checking
Great
debit
example,
card, whatever,
Great
whatever.
example.
When it's stolen, or somebody takes some money off,
Yes.
or the money whatever it is, baby,
You have to wait.
you have to fight for this money, okay? Because it's your money. They don't care, okay? You're going to fight. Now, mind you, when they did that to me, it wasn't like hundreds of thousands of dollars, but guess
Right.
what? It's my money. I want my money.
Right.
And so, but guess what though? If somebody hacked into my credit card, or they got my credit card information and maxed out my card. They can max out my card. And I call and I say, this is not me. I can, whatever they ask the questions of, prove da-da-da. And then guess what? That'll be cleared up in like 3 days, 4 days. Because guess what? Visa's going to want their money. They going to figure out how they going to get their money. They don't care about my money.
Right, right. Because that's another thing too, is like sometimes you hear about people who dispute things on their credit, right?
Uh-huh.
That's a big difference. Disputing something on your credit versus somebody going out and purchasing 5 airplane tickets to Mexico on your credit card that they know for sure wasn't yours. That's a big damn difference
It
in the
is.
sense of, hey, I'm saying there was something on my card or my statement that I don't agree with 3 weeks later versus I noticed today that somebody, I got a
Or they'll call.
they'll call
Yeah.
or I'll get a text or whatever saying, "Oh, Fatima, someone tried to use your car in whatever country," right? And now again, that very rarely happens because I'm using my card so much. For example, coming down here, right? I use the card so much that I switch cards,
Okay.
right? Because what I also realize is that certain cards have different advantages,
Yes,
right?
they
So
do.
you get points, you get different incentives,
Travel, money back.
right? All types of things. So I said, okay, I'm going to start leveraging my credit even more and using this card for various things that I know that I'm going to get more advantages from. So like, okay, I have a gas card, I have a food card, and now I
Now
have
explain. Now, when you say a food card, gas, you're saying you have a credit card specifically for gas
Yes.
because you probably get some
Yes.
type of purchase points on that.
Exactly.
Then you have one specifically for food. Okay,
Exactly,
okay.
right? So it's just like now I've built myself up to this point. Now, granted,
It didn't
while
happen
we
overnight.
were in different situations, I also was bad at, I made mistakes in the sense of using up my whole credit limit, right? So
Okay.
it's like where I had a lot of cards,
Okay.
I also made the mistake of not using those cards properly.
Okay.
Not leveraging my credit. So I had to go through a period as well, like I told you, where I had to pay stuff off, restart, still maintain these cards that I have.
Absolutely.
But now I'm refocusing on the sense of I'm now using those cards to my advantage, right? So I come down here, and we're in the store, and it's just like, oh, Chase said, nah, where are you at? Usually you're doing all this in Virginia. Like, what's going on? And I'm like, oh, text message. Yeah, this is me.
Yeah.
Fraud alert. This is
Yeah.
me,
Yeah.
but that's the protection of understanding that I'm constantly spending in these areas. So it's just like anything that's outside of that norm, they'll let one go through, but it's just like, oh, you're doing it again. And especially the fact that we were at a mall, right? You understand, like people mostly go and they buy stuff,
Yeah,
TVs,
absolutely.
malls, so it's a trigger to them. So it's just a thing of you protect yourself more when you use other people's money.
I mean, that's the best way to live. To not. I heard this man say. He said, and I don't know where I heard it from or whatever.
I think it was
but
Instagram.
No, not that man.
Okay,
It's
you know
another
who I'm
man.
talking about. Okay.
I know who he's talking about. It's another man because it was when he said it, I said it was the way he said it, and that right there is so many things that people don't understand. People can tell you the same thing 1,000 times over. One, if you're not ready to hear it, or two, if it's not presented in a way for you to receive it, or you can, then
it's out of scope. It's like
yeah.
you can't even fathom how to do
Absolutely.
it. Right.
And he literally said, I don't use any type of cash. He was like, he was like, why would I do that? And he said, because guess what? At the end of the day, if I have a debit card and somebody takes my money,
Yes.
they're not going to fight for that money.
No.
He said, but if they take my credit card and
Yes.
run it up, that credit card company is going to fight for it.
Yes.
And I sat there and I was like,
Yeah.
wow. And then he said, and then on top of that, I can reuse that money every month.
Yep.
You can't reuse that debit money every month because once you debit it out, it's out.
It's
But that
done.
credit is revolving. It's
Yes.
constantly growing. The more you pay, the more you use, the higher it gets for you to continue to keep getting more and more and more
Right,
credit.
because
and it's all about more.
It's about more. We want, because eventually credit cards companies are going to say, oh, okay, jump out, girls. We have our credit card. Yeah, we may have let's just say $1,000. They pay that off. They've paid that off consistently over a year. Let's give them 2. Let's give them 5. Let's give them 10. I very rarely hear of people going through situations where if they're using their credit properly, right, regardless of the amount you have, I very rarely hear of times where they're not getting a request to get more because banks want you to spend. That's the purpose
That's how
of
they
it.
make
So
money.
why not use them? Spend it according to your expenses. What we're doing, we're in the process of building, right? So over this course of COVID and this whole thing of what we're trying to explain to you guys is just We just don't, we want you to be smarter about how to leverage credit and use other people's money. Like, use other people's money.
Don't ever use your money.
Don't use your money.
Invest your money.
Invest your money. Like, they're going to give you money because they're thinking you're going to make a mistake.
Absolutely.
They want you to make a mistake, right? So we're so tired because we never got to that point. We're down here. We're going to crypto conferences.
Yes.
We're going to family football games. Her son had a football game this morning.
Yes.
Last night, we,
went to the conference.
Yeah, we went to the conference. And it's just like we're doing a lot of things where we're watching videos. We're just trying to understand. We're trying to grow in the process of, one, give you guys more information, and two, also help our own selves with just our credit, our assets, our individual investments.
It's a whole lifestyle. We're trying to do like it's a whole lifestyle thing because everything ties in together.
Yeah.
Like, you have to, it's easier to start off right then go back, and that's what we're learning. And what we want to do is, if we can halt somebody before they even start and listen to some of the things that we're saying so they can kind of be on that path of right, because it'll be so much easier. It's so hard. Like, that's what they don't tell you. They don't tell you, bro, you fuck up your credit, you're like, it's going to take you forever. I mean, and it depends on what you do. Because I know some people that, I mean, it was just like credit cards was coming out the sky. And I'm like, are you sure we might want to be a little careful? Oh, no, they're giving. And yes, that was the two sides to it. Yes, they're giving. That's good. We keep taking. But the bad side was we're spending stuff that we can't afford.
Right. Because we're not using credit to because another thing we haven't spoke about is budgets, right?
Yes.
We don't use credit outside of what we can afford.
Absolutely.
Right. So even if they're giving us advances and increasing our credit limit, we're still only using it to what I can pay off. So for me, my 9 to 5 and my other investments that I have and the different things that we're doing, if that's what I have, that's what I'm, like, I know that my budget is set up so that I'm not exceeding that.
Absolutely.
Right? And it's just like where you go wrong is when you exceed that and you're like, oh, they're just giving me credit cards, girl. Oh, I got a new credit card. I'm going to use it up to, and then here you are. It's going to take you, how long it takes some people to pay off credit?
I did not realize.
Did you read that page?
Like, if you're paying the bare minimum of like $500, I'm like, what is, because it's like, what, $20 a month or something like that. They'll give you some dumb $20 a month. And then you're paying for like 2-3 years.
Sometimes 5 to 10.
But these are little, this is little amounts.
Yes.
So can you imagine these larger amounts?
Right.
But that's how people, like you said, that's how people legitimately get stuck into it, because before you know it, they gave us all these cards. And now I have 5 cards. I've maxed out 3, and 2 of them are almost there, and I have no cash to be able to pay them off.
Because your cash is now going to pay these credit cards off, right? And it's just like the cash that you once had is now going to pay off these cards that you didn't maxed out because you weren't being diligent and using credit properly.
You didn't want to be patient
and not leveraging your credit properly. And it's just like we talked earlier about, just like with loans, right? We just want to clear up something like with loans, and when you get a loan, right, you don't want to get a loan with a payment that you can't afford. That it goes to a car, a house, a credit card. So just like how when people get their cars repossessed, their house is foreclosed on, or their credit card is shot to shit because they're getting something that they can't afford.
Absolutely.
So just we spend within our means. The budget
has to happen first.
The budget has to happen first because you have to know what you can spend in order to know what you can get, right? Like, I'm not going to go out and get a $50,000 credit card and not say, okay, can I pay this and max it out?
Absolutely. I'm about to say, and max it out.
And then say, oh, can I pay that $50,000 at the end of the month?
Because that's where it's at. They make you think that it's okay to pay over time.
No.
But the reason you're paying over time is because you're giving them more money.
And it's interest that you're just throwing. It's like, look at your people. Please, look at your credit card statement and go look at how much interest you've paid or are paying per month on you carrying over that balance each month. It's like you're just, That's how banks make money off of
You're
you.
literally giving them
You're
extra
just
money.
giving to them. You're giving it to them. Like, that's interest that they charge you for you carrying over that balance, or sometimes being late.
Oh
Like, and
yeah.
oh, don't be late with a credit
Oh
card.
yeah.
So it's just like,
That lateness will drop your
mm-hmm.
drop your credits like.
So for example, like if we had a secure card or a
Mhm.
credit card that was worth the limit on there was $5,000,
Mhm.
and you maxed it out,
Mhm.
how much interest do you think that how much interest is that you've paid on that 5,000?
I'm paying my minimum payments because I
Mhm.
can't afford to pay it all.
Mhm.
That 5,000 plus another what 2 to 3,000 possibly, because it's going to take me $5,000 is going to take me, if I'm paying the minimum, a few years to pay off. And so
Yes.
in that time I'm paying interest as well.
Yes.
And that's even more. Now it's like you're digging yourself in a hole even more. Now you're losing even more money.
Yes.
And that's not what we want to do. What I've realized in all of this, in this whole journey so far, is that I understand why hedge funds and big corporations are so big, because it's all about more. It's all
Smart
about
money.
consistently making more, having access to more. And more is just not one way of going out and working. More is not one way of going out and investing in
Right.
crypto. Or it's so many ways that you can have more. The way that we want our portfolio, we want to have a very broad, diverse portfolio. A portfolio is something that you want to explain that part to me really quick.
Yeah. So like,
because you hear it, but
I don't think people understand. Like, basically what we're saying is we want our portfolio, meaning we want our assets to not just be in one thing, right? Just like we don't want to just have a credit card. Like she said earlier, her record was thin, right?
It's a thin file.
Your file was thin, right? We don't want to have thin files in terms of our assets, right? So why we're honing in on credit is because with our credit and having good credit scores, we're able to do other things.
Absolutely.
To diversify that portfolio, and diversifying your portfolio, meaning those assets are a multitude of things. So those things are credit cards. Those things, well, that's not really assets, but it's just like
it's revolving. It's not a loan, and that's the thing people have to understand too. A credit card is better than a loan. Loans, once you pay it, it's over and done. That line of credit, it's revolving and it continues to grow.
Correct.
So that's why we say loans. You like a loan only if you have to have it, like if your roof caves in or something like that.
Right.
Okay, so let's just say when we speak of portfolios, I'm gonna speak on some of my stuff, and what property, that's an asset. The credit, credit cards and stuff, that's a revolving, tricky asset, but it can be an asset, and I'm gonna explain that later.
If you leverage it in a way.
If you leverage it right. But what else? I said property already, right?
Right. You said property, your business.
Business, yep, because you can get business credit cards, business loans. You have one of ours. We're also in crypto. We have crypto right now. Another one is whole life insurance policies.
Talk about
Oh
it.
boy,
Oh.
trust me when I tell you,
Yeah.
I can't stand nothing about them.
Yes.
Not one thing about them. It is taking me y'all look at me, almost a year to complete a whole life insurance. He said, this must be a record.
Yes.
He said, this has to be a record. I said, bro, it's a lot. A whole life insurance policy, we'll go into that later, but that's another way to give access to more cash.
Yes.
You want to always be able to. Do you know that you can have not a dollar in your pocket? You can walk in the bank and say, I want a loan, and they look at your history and they're like, wow, you have a 750 or 800 credit score. You can walk out with damn near $1 million probably.
If you wanted
If
to.
you wanted to, depending,
Right.
but you're going to get damn near what you want.
Right.
If you walk in there and say, I want $100,000, that $100,000 is going to be in your account tomorrow. People don't understand that. It's not, because now, and it's going back to where the change is. When credit came out, it was that point in time to get prepared to where we're about to go. Because it's like, we don't need, that's why everybody was putting things on their debit cards and stuff to start swiping and all of that. Because after a while, we're not going to need what?
You ain't gonna need no cash.
We're not going to need the cash.
Right.
It's in credit is showing you don't need cash to get cash. You need the credit.
Yes.
You need a consistent history
Yes.
of showing something, and that's why a lot of people have bad credit. They don't understand, because it is a process. Trust me, I have no patience. Out of everybody in this room, I have none. And I go through my frustrating
Right,
moments,
right,
like, when I'm doing my things, I'm paying my bills, I'm getting all, just making sure everything is on track to keep growing, and then
right,
it's not growing as fast as I want it to.
right.
I get frustrated, but I have to take back and be like, well, first off, I remember when we first started all of this, within 4 months, I'm not lying, within 4 months, my credit changed
Yeah.
drastically, like, because it required me going into my credit, looking at what's going on. I realized somebody had opened up an account in my
Yep.
name.
The AT&T account.
Uh-huh. So you have to go through, and it's not an easy process. When
No.
being responsible in general is not. It's
It's
boring as shit. Nobody likes to do it. I tell my kids all the time, y'all want to be kids because, y'all want to be adults because you think we can do what we want. We can't.
No, it's not a it's
We
not
can't.
no, it's not easy.
It's not easy. It's legitimately about balance, about knowing all of the things you can and can't do. That's really what it is.
Right.
I cannot base my spending, investing, buying, saving, whatever. I can't base it upon what she does.
Right.
And we're family, but that's not how it works.
Right.
I have to do it based upon me.
Right.
She has to do it based upon her.
Right, right.
And that's what people don't understand. They get these credit cards and stuff. Oh shit, now I can go get a bag, bitch. I'm about to be fly. Okay, but guess
Yeah.
what? You have a $2,000 bag
With
and you
no
have
money.
negative now $2,000 in your account.
Yep.
My motto is, at the very least, however much that bag costs, ladies, I want you to at least have double. And I'm not saying in the bag, but I want you to have access to double. And just that's just the bare minimum.
Yeah,
because it makes no sense.
It makes no sense, and that's the thing where we're talking about using credit properly, and it's just like what we're trying to do is diversify our portfolios so that we're not just in one thing, right? We want to be in many things.
Because things get slow.
Things get slow. You gotta go
You gotta move where the money moves.
goes. Like
Where the money
goes,
reside, where the money reside, where the money.
You know?
But you do, and that's
that's the
funny.
truth.
You do, because if you look at the bigger companies, you don't ever see their money just sitting somewhere in a bank.
No.
Like really, like for the researchers out there, like look and research and see
Yes.
how these big companies, people with a lot, see their money is never setting still. It's not, all of their money is not in the bank. They
No.
might have some in the bank for emergencies,
Right.
but the bulk of their money is somewhere making more money.
Yes. So like a prime example, right? How many times have we heard MicroStrategy,
Mhm.
right?
Michael Saylor.
I'm Michael Saylor, right?
With MicroStrategy,
with
you're right.
MicroStrategy, right? Michael Michael Saylor's point one time was when he was talking about why he's heavily investing in crypto is because of his portfolio, his balance sheet, right? He has sometimes big corporations have just their cash sitting, so it's just like, okay, why not take that cash, reinvest it into something that I know I'm going to get a return on, use that leveraging of, okay, I'm not going to get the same return on this investment sitting here, and whether it's a whole life insurance policy, whether it's a mutual fund, 401k, whatever you want to say. And I don't think they're really investing in 401ks, but at the same time they're taking that money and they're using it to go onto something that they know the return is going to be greater than any other centralized platform.
Absolutely.
That's what we're saying. Everything goes hand in hand, and you have to use things, leverage things, because the fact is that he took this money that he didn't spend.
Yeah, he took his savings. Is like, essentially, to break it down, I had some savings over here. It wasn't really making any money. Now I put it over here in crypto, and now it's making a whole lot of money. And that's just what people don't understand. Savings account, that's BS. Bank, all of these things are
You're getting
BS.
robbed.
You are, and I really want people to understand. I'm not saying, oh, don't have a bank account, don't have a savings, any of that.
No.
I'm just
Yeah.
saying, guess what? Know why you have a bank account.
Yes.
Know why you're doing
Right,
these things.
right.
Use it to your advantage.
Yes.
The reason that I have a bank account still is just, I have little things here and there that I like to pay. But for the most part, to get my fiat, my US dollar to crypto, I have to go through my bank account. And that's what I use that for. And now, for me personally, within the time frame of us being in that, I've noticed some of the money that we've invested, and even when they shook the shit out this market, like, I don't know, like, how the markets always go, but I feel like they shook the shit out of this one, and I guess because it was just us here. But I felt like it was just so intense, and everybody, like, more people than the norm was like, no, this never happens. I said, of course, because we here now. That's
Right,
why.
like we here. Jump out girls are
Yeah,
here.
right, I'm sorry, the crypto market, because right now, to go back to what she was saying, when how we move our money, and while we're in crypto right now, to explain that is right now is the time the volatility is high, meaning there are a lot of gains that can be made, and these, when it comes to crypto, it only happens every so often, every
Right.
few years. So we know that this is not about to last 2 more years. We know that by the end of this year, the market is going to start cooling down. The crypto is going to start getting low. And then the next couple of years, because that's what it does, is going to continue to go lower, which is called a bear market. And in the bear market is when people who have money, who have that savings account on the side, who have that stash over here on the side, they're like, okay, now, boom, now it's time for me to put my money back into crypto. And this is
Right.
just for crypto right
Right.
now, because the market, it's a bear market. And then when the bear market is over, they put their money down here. It's going to go up there because you put it in low. Everything in crypto, I mean, well, in stocks and stuff too, the lower you can buy, you want to buy low and sell high.
Right, exactly.
Buy low and sell high. And so right now, we're in the process of, you know, watching the market. We're hoping that by the end of this year, we can really have a great story for you all from some of the things that we've already put in. But we do have two goals that we are trying to accomplish that we want you
Not
all
trying, we will.
No, you're right. Trying is BS. That we're going to accomplish. And to kind of, we're not trying to prove anything, but to be, I don't even want to say inspiration. It's not even like that. But to show that it can happen, we're going to allow you all to see some of the things that we're doing
Yes.
to reach some of the goals.
How-
Speaking of leveraging,
Yeah, let's
loans, because we were talking about loans, and we wanted to be a little clear on that. We're not saying get a loan to invest. No.
No.
What we're saying is we own properties. I have children, okay? I have boys, okay? They are destructive as hell, all right? I mean, any day you can go in, you have a hole in the wall, you know, the roof can be blown the fuck off. Like, anything can happen, like, legitimately. COVID, I was like, my house is not going to sustain these kids being in this house.
Right.
So, prime example though, we needed to do something with the roof. It wasn't anything major, but it was something with the roof.
Right.
I mean, and it was, roofs are not cheap. You
No.
know, that's a whole nother thing too. Before buying properties and all, understand you can get anything. It's the maintenance and maintaining of everything.
Yes.
That is the struggle. It's not getting it. It's the maintaining it. But anyways, back to subject. So the roof, blah blah blah. Needed to get something done to the roof. Have the money to pay for it, but we knew that the money that we have, the liquid cash that we have, we wanted to put it somewhere else. We want it to grow. We don't want to give it and put it somewhere and then we not get it back.
Right.
So what we did was we got a loan out on the house, against the house. Is that how you say it? Against the house.
Against the house.
And not like full value or anything, but just enough that we know we needed to repair some of the things we did in the house, and maybe a little bit more. But everything we knew we could pay back because we had the money. We just know we wanted to move our money somewhere else. So we got everything paid, and had a little bit money left over. So what the plan was to take that money and put it back into our crypto market at a time when they were low.
Right.
And then when the market goes up and gains, then now we have a higher return, a ROI, a return on investment.
Yes.
Extremely well. Now, the way that we legitimately budgeted out, strategically thought about it, it's like, it wasn't like, oh, okay, I'm going to take this money, I'm going to put it here. No. You have to think about it because timing is like timing. All of these things are very important. And then with crypto, it's very volatile. Excuse me, I'm spitting now. I feel like your boy now. I think I'm really getting into the conversation. You don't know, and still nothing is guaranteed.
Right.
So that's another thing you have to think about. It's like, yeah, you know that this is what you want, and you know from experience your investment, but still, that one time something might happen. So that's where that whole budgeting and stuff.
Yeah.
If this doesn't happen, do I still have enough money,
Right.
or is my job going to be able to be around for me to sustain paying
Right.
this monthly payment?
Right.
You paid it off. That, you know, now that equity is into your house, the roof is fixed, put the money in investments, the money in the investments went up, and now it was like a win-win. It didn't happen that fast, but it was legitimately a win-win.
I mean, you literally used other people's money.
We did not touch our money at all to do something. And I'm that person. I hate spending money on stuff I don't want to. Like, I don't want to spend my money on a roof, knowing damn well I need a damn roof.
Right.
But I'm just like, this is dumb. I don't want to spend money on a
Right,
roof,
right.
But guess what? Now that the techniques and things that we know and the education we have, I'm not spending money on a roof. I They gonna spend money on the roof.
We using other people's money, people. Like,
Come on now.
it's
You don't want to spend your own money?
no.
Look at it like that. Other
Yes.
people's money that you have to be responsible. It's not like it's just other people. You have to be
Yes.
responsible, budget, pay it back. But it's still such an advantage.
Yes. So ultimately, like what you did and what I've done by using our real estate property, using, we're taking HELOC loans off our real estate property. We're taking sometimes loans off our real estate properties to then go reinvest. But ultimately, no matter whether it's crypto, it's real estate, it's whole life policies, it's stocks, all the various things that we're all into, we're using that to leverage and then to gain, we're getting investments and we're getting assets from these various things in our portfolio, right? Because our portfolio is diverse, and it's like we're using others people's money for our own advantages. And it's just like there's ways that you can do it and be smart about it. And it's not just for the rich people, like it's not just for a certain color. Anybody can do this. This is if me and her and we're educated, like that's another thing too. We're not talking about people who maybe society sometimes tells you, oh, you got to go get a college degree. Yes, that's fine. But we're also talking about we have college degrees. And we didn't know this stuff. We didn't know none of this shit.
Back,
yes,
this means
give me,
more. This
give me
is
my
more
fucking money back.
I want my money back too, because this is the knowledge that we've learned for not for free, but something that we've had to grow to learn on our own has been way more than anybody
shit that we've
teaches
learned
in some
in
damn
school.
high school in economics and finance and business. No, and it's like we get why. Because
they
it's
want
taught that way, because they want to keep the system floating, because that's how they make money.
Right. They want you to spend and not know how to leverage. They want you to max out and not know how to leverage. They want you to go into debt and not know how to come out. We're telling you, there's ways that you can, hey, look, if you made the mistakes, that's fine.
You can bounce back.
You can bounce back from that. There's ways to use smart money to your advantage. It's just like what you hear about on TV. There's ways that you can do this, and we're trying to show you,
that
and
we're
give
living,
us
like we're legitimately living proof of it. Like, okay, if you see us saying this, doing this, and we're trying to give you all examples and showing receipts of these things, because it's like I said, within some of the moves that I made when I first started doing some of the things that I was doing, let's just talk about credit, I noticed a difference, a big difference within 4 months. Now, granted, you're not going to sit up here and get a 800 as fast as you got that damn 300, because like it's easy to go ahead and get that 300, but that damn 800 is different. But that's why I say we're doing this, because it's easier to start off right and continue rather than coming back and having to clean it up and fix it, because it takes a lot. It takes a lot more time.
Yes. Don't be afraid to have to start over, but also too, what we're trying to avoid is you having to start rebuilding versus
don't be afraid to learn.
Yeah,
because it's a learn. Don't be afraid to relearn.
Right.
Get retaught something.
Right.
Because we had to get retaught a lot of things.
Yes.
Because of how we were raised.
Right.
So jump out there. Like, that's why we have our name. It's funny, but because we legitimately, not in everything in life, but for the most part, if it makes sense for us, we'll be like, forget it. Because at the end of the day, it's a 50-50 chance we're going to win. But if we don't do it, it's 100% chance that we're going to lose.
Yes. And
so
we don't want to lose.
No,
so
I'd rather try.
Than lose. And it's just like, that's why we jump out there.
We just jump out there. So you just got to jump out there. Oh. And she's gone. I was like, but that's what it is, though. That's what it is, though.
Right? That's what we do.
It is.
We jump out there. You have to jump out there. You have to take risks. You have to be afraid to do what you're not comfortable doing. Do you think, honestly, we're comfortable right now? I mean, we're okay right now.
Yeah.
But it's just like, this is something new for us. Everything is a learning process. We want you to give you information in the most basic terms. Like what you say, did they fucking understand what you were saying? What did you say earlier? You said, are you guys motherfucking understanding what I'm saying right now?
Yeah.
Like,
no, that's just what it is.
we're not trying to give you specific terms. We're not trying to make
and
this
be technical because I know I'm gonna say the wrong
No.
definition to some shit. I'm gonna say the wrong word or whatever. At the end of the day, though, I know that the basics
The
is there. Like,
concept.
it's the concept, and I don't want you all to get confused on what we're trying to bring in the concept because the system does it all the time, and it's
Yes.
not that hard. And
Right.
I would hear that. This is not as hard as they make it seem. Like, what are you talking about? You have to get into it. You have to read a little bit for your own. You
yes.
have to do a little research on your
Yes,
own.
yes.
You have to isolate yourself and make a decision what you want to do for
Right,
yourself.
right.
And when it comes down to any type of investing, anything that is going to give you longevity,
Yes.
you can't really add anybody into the mix unless they are ready to be like-minded with you.
Like-minded. You got to have the like-minded people
Yeah.
around you, you know. So I think ultimately, like, we just want you to jump out there and just change. Try.
It don't
People,
hurt to
it
try.
don't
What
hurt.
is it going to hurt you to just jump out there and be like, okay, great. I got me a little secured credit card. I paid for it for 6 months, and now my credit is growing.
Yes.
The
You can
good will happen.
You can go get that car. You can go get that house. You can use these things and take it's diligent, discipline, and patience. Right?
Yep. Take advantage.
Yeah.
Take advantage. But it's a very patient. It's a patient game, though. They don't tell you it's a patient game.
Yeah.
This is not stripper money. This ain't drug money. And it don't move like that. But it lasts longer than that. And that's what you have to understand. Whatever is going to come fast is going to leave fast.
Yes.
Whatever comes slow, we're building the foundation. You're
Yes.
building some type of strength.
Yes. We're building longevity. We're building
Longevity.
generational wealth. And I
Damn,
don't
Nat. Shit.
fucking gnats everywhere.
Got us looking crazy, man. I was digging in my nose earlier. Shit.
We generational wealth, because another concept that we haven't talked about is most of the time nobody's wealthy, right?
There's a lot, yeah.
Everybody's just
They built it.
Wealth doesn't just come in 2 months. Wealth doesn't just come in 6 months, right?
This is decades.
Decades.
I'm talking decades.
This is what we're trying. We're not trying to be rich, right?
We will never be wealthy.
No.
You all will never be wealthy.
No, none
if
of
you were not born into wealth, you will never be wealthy. But your children,
Yes.
your children's children
Yes.
can be wealthy.
Yes.
And I know that sounds crazy, but you have to think about it. If you were not born into wealth and you built a lifestyle to grow wealth, you're rich. And I'm cool with being rich, and I'm gonna claim it, okay? I'm cool with being rich, but I'm even cooler with my kids and my
Right.
grandkids being wealthy.
Yes.
Because we started off having wealth, but the mismanagement of it
Yes.
put us back into that. We thought we were middle class. We was skating on that high poor ass class
We
line.
literally were
Ain't no damn
above,
middle class.
slightly
were
above the poverty line.
We were high. What is it? You have mid. We were mid.
We thought we were middle class.
No, we weren't.
No, we were
high
poverty.
high poverty. We were skating that high poverty line.
High poverty.
And we're saying that playing, but when you start really understanding money, you're gonna
Yeah.
realize y'all motherfuckers is broke as shit too, and y'all ain't
Yes.
got not a goddamn dime to y'all name. I'm not trying to be funny, but it's reality.
Yeah.
You really realize, like, when you start really understanding money, like, damn, we broke as shit.
Yes.
This ain't
Yeah.
no money.
This is not money. We need long-term
And
money.
so that's why we are into doing more, jumping out there to get more.
Yeah.
The more assets, the more money, the more privilege, the more freedom, the more everything. This is about getting more. And our thing is to be able to do what we want whenever we want. Financial freedom.
Yes.